The following is a presentation of TFNN. Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Hi, folks. Welcome to another edition of Breakout Investing on TFNN. Ken Shreve with you. Hope you enjoyed your three-day weekend. Belated happy Memorial Day to you all out there. Just a reminder that Breakout Investing airs every Tuesday and Thursday on TFNN from 3 to 4 Eastern. It's a call-in show. If you have any questions you want to ask me about the market, go ahead and do so. The number to use is toll-free, 877-927-6648. You can get my show as a podcast on iTunes if you can't listen live. And don't forget, you can listen to all TFNN programming on your smartphone. Just plug those earbuds in, type in tfnn.mobi in your smartphone browser, and you can get the stream that way as well. I'll be going over charts on the show, as I always do. We'll start by taking a look at what the major averages are doing today. If you want to look at those charts right along with me, just do it on Tiger TV on your PC. TFNN.com. Tune in to Tiger TV. The show is carried live on Channel 1 and archived on Channel 13. And you can also watch Tiger TV on your smartphone as well. All right, starting off by taking a look at the S&P 500. Let's go ahead and get a refresh here. Nice start to the week, a shortened week of trading. Of course, we got the big jobs report looming very large this Friday, but right now the S&P 500 is up 10.5 points, 0.8%, pretty much in the middle half of its trading range today. It's trading around 1319. Let's move over, take a look at the NASDAQ composite. At last check, it was outperforming a little bit, not that much anymore. NASDAQ up a little over 23 points, also 0.8% to 2861 thereabouts. And yeah, I wanted to take a look at a chart that doesn't get a lot of it doesn't get a lot of attention. I talk about it infrequently, but this is really an ugly index chart here. This is the New York Stock Exchange Composite Index, and today it's up about 56.5 points, about 0.7%, to 7566. And, why is it an ugly chart? Well, the market's not in great technical shape here. It's not like the NASDAQ composite, S&P 500 are still holding above their longer-term support level, which is their 200-day moving average. But look at the NYSE composite here. Breaks convincingly below its 50-day line in May, and then it goes below its 200-day, which is really a no-no. And then look at what happens. Last week it tries to get above that 200-day line, gets knocked back, and here it hits an intraday high of 75.83. Now trading in its near its session low today, still higher, but this is a troubled index as well. Let's take a look at the Russell 2000 small cap index. Now you can see this one has actually, even though it's not in great shape technically here either, it is still fell below its 200-day moving average, but has been trading above the line for the past 6 trading sessions or so. So listen, we start off the week with nice gains. We are 6 days into a rally attempt for the S&P 500, the NASDAQ, all the major averages for that matter. 6 days into the rally with no follow-through day. Again, we've got this jobs report Friday. Who knows how the market's going to react? I've seen expectations for job growth of 150,000 all the way up to about 175,000. Hopefully, it's a palatable number for the market. We get some much-needed follow-through here, but I gotta say it's pretty much 50-50 at this point. It's a market where I'm trying to be bullish. But it's difficult to do right now. But we're going to enjoy today's gains. The Ultimate Growth Stocks model portfolio is outperforming nicely today. So if you want to check out a free trial, 30 days for that matter, 30-day free trial to Ultimate Growth Stocks. That's my weekly newsletter over at TFNN. I update every Tuesday, so I sent an update out earlier today. Comprehensive weekly update, and then I send out email buy and sell alerts in between market updates. I do have a model portfolio that goes along with the newsletter. And so the portfolio is having a decent day today, so be sure to check that out. You can do that. You can actually just go to kenshreve.com. That takes you right to my information page over at TFNN, where you can sign up for 30 days free. Headlines in the market today. What's the market worrying about? Well, it's worrying about Europe, questions about Spain's solvency, steps that they're taking to fix their economic woes. Will Greece stay in the Eurozone or won't they? Big elections coming up middle of June 17th, I believe it is, in Greece. Now there's talk that Greece, might very well stay in the Eurozone. I think that's probably what the market wants some uncertainty there. There's obviously still concern that if Greece does go back to the drachma and abandons the euro and the Eurozone, that there will be some contagion that arises as a result, and the market is kind of worried about that. Also talked that China could be leaning toward more stimulus measures as well. So you've got your positive headlines, your negative headlines out there. What we know right now is that the market is still in a downtrend, waiting for a sign of strength from the major averages. Haven't seen it yet. I'll tell you, when the day started off today, NASDAQ up 1.3, 1.4, 1.5%. Dow, S&P 500 up 1%. Looked like, they were indexes were strengthening, and we'll just have to see what things look like by the close. We've got about 45 minutes left to go in Tuesday's session, so we'll see what the close looks like. Volume very light in the market Friday ahead of the Memorial Day weekend. We only had 590 million shares trade on the New York Stock Exchange on Friday, so no surprise to see NYSE volume nicely higher than Friday, but still, even if we hold this pace, we're only looking at 700 million shares, which is pretty light, below average for the NYSE. So even if we do, finish with decent gains today, volume will be on the light side. NASDAQ volume on Friday also very light at 1.25 billion shares. At last check, tracking about 25-30% higher than Friday. So that would put it on pace for about 1.6 billion. That's also below average, considering the NASDAQ normally trades about 1.7, 1.8 billion shares a day. Let's take a look at some movers today. Heard Tom and Steve talking earlier in the day about Tractor Supply. I had to do some digging to find out why the stock was acting so weak today. Tractor Supply, a big growth stock, big market winner in recent years. But Tosco is a stock under a lot of pressure today, down 7.5% to 92.08. This is a farm and ranch equipment retailer, and there was a little note put out today by Cleveland Research. I don't know if Cleveland is a big outfit or just a small boutique. I hadn't heard of them before today, so I assume they're on the small side. But boy, the volume in Tractor Supply is just absolutely enormous today. A lot of big investors getting out of this stock. So if you are long, you are certainly been given a major sell signal today. But the note basically said that same store sales at Tractor Supply, according to this note, slowing down the pace. So concerns about slowing same-store sales at Tractor Supply. That's what's weighing on the stock today. Hey, we got to talk about Facebook. Shares of Facebook down. Let's see, where's Facebook? Down close to 10% today to 28.81. Just a nightmare here for people that listen, if you're in that stock at 40, 41, 42, 43 bucks a share, you should always have stops when you buy a stock. So I'm sure there are investors out there that are sitting on a pretty big loss at this point. Even people that were able to get the IPO at that 38, still sitting on a big loss here as well. It's pretty obvious what's going on with Facebook right now. There is just no buying demand at all for shares. Okay, institutional investors are not interested in touching this stock with all the questions that are out there about where this company is going to achieve sustained growth going forward. Okay, if you look at earnings estimates for Facebook this year and next, it's only a company that's expected to grow annual earnings by 15, 20%, something like that. You go over to Yahoo Finance, you see that even at its current price of around 29 bucks a share, Facebook is selling at 74 times trailing earnings, 45 times forward earnings. Folks over at Investors Business Daily, they're probably calculating earnings a little bit differently, I would guess, than Yahoo Finance, but IBD has their trailing PE at 71 with a forward PE of 66. So you're talking about a stock that is now down $9 from where it came public at 38. Okay, so it's at $29 a share, and it's still selling at a stratospheric multiple. Okay, I don't doubt that this company, I'm not saying this company does not deserve some sort of multiple, but it is very unclear to me where this company is going to grow. They get most of their revenues right now from display ads at Facebook.com. They get meaningful revenue from Zynga with the online games and things like that, but they're looking for other ways to grow at this point, and I'm not sure Facebook knows where that growth is going to come from. Interesting, the folks over at CNBC today put up a poll asking if Facebook should buy Research in Motion. I mean, my goodness. Could you imagine? Facebook buying Research in Motion. New York Times over the weekend reported that Facebook, they're hiring Apple developers, and Facebook's thinking about getting into the smartphone market. I mean, listen, the stock's performance today, I think, is saying pretty clearly that would not be a good idea. So much uncertainty around Facebook right now. I don't think this stock is a deal at $29 a share. I don't know where the bottom is. I know that it is a sky-high valuation at this point, and this company may very well find its footing at some point. I thought the timing of the IPO was terrible. I thought that Facebook easily could have come public later this year, end of the summer, early fall, during a seasonally better time for the market, and it probably would have been a better overall IPO. Hard to say, but that is that's what I'm thinking. So, tough going so far for Facebook. Long stock getting hammered again today, down another 10% to 28.81. All right, another story stock here. Let's take a look at Vertex Pharmaceuticals. Big gap up recently for this stock back in early May, holding gains nicely. Very, very bullish chart here. Stock hit an intraday low today of $50 even. It is off its lows, currently trading around 56.55, still down about 13%. This is not great news either from this company. They came out earlier today, said they made a mistake in calculating results from a clinical trial of 2 cystic fibrosis drugs. Basically said that the combination of drugs didn't work as well as initially reported. When you're come out with a press release like that, it's going to take you a while to regain Wall Street favor. So shares of Vertex, I don't know if they're on sale here either, down 13% to 56.55. All right, folks, headed into the first break. We'll be right back. You're listening to Breakout Investing on TFNN.
It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Breakout Investing on TFNN. Couple of house cleaning items here. TFNN goings on. Don't forget TFNN along with Great Panther Silver for the entire month of June. You just go to the home site of TFNN, homepage of TFNN.com, register for free to win your chance at a giveaway of a silver coin every day, every business day during the month of June. TFNN and Great Panther Silver going to give away a beautiful silver coin each day, free. All you have to do is register at TFNN.com. And then also my good pal Basil Chapman, another newsletter writer at TFNN, is going to be doing an all-day webinar Friday, June 8th about technical analysis. You can get more information on the homepage of TFNN.com as well, right in the carousel there. So check out Basil's all-day webinar Friday, June 8th. Technical analysis will be the focus. Okay. Mentioned the heavy volume selling in Tractor Supply. I'm very wary on this stock right now. Huge volume in the stock. Institutional investors dumping shares today. I did want to call your attention to another interesting stock in this industry group. I do not like the way Tractor Supply is acting. This has been a huge market leader. All market leaders eventually top and surrender market leadership. I think Tractor Supply is probably in the, definitely doing that now. But let's take a look at shares of Titan Machinery. Titan Machinery. Much smaller company, a little more speculative company than Tractor Supply, but let's take a look at Titan Machinery. It's up 2% today to 32.57. This is a daily chart. You can see it did recently climb back above its 50-day moving average, came back down to the line, found support. It is off its high today, but still a stock worth watching here. Let's switch over and take a look at a weekly chart for Titan Machinery. And we'll see that it recently broke out over a swing point of $28.68. You can see a big breakout right here, and then a little pullback to its 10-week moving average. So if this market, does start to rally, maybe it does on a better than expected jobs number, you could take a look at weekly charts like this where you had a breakout several weeks ago, and then the stock comes down, finds support at its 10-week moving average. That can, if it's clear the stock is finding support there in heavy volume, and that is not the case yet with Titan. But if you do see heavy volume buying start to pick up in this stock, you could see an entry point in this name pretty soon. So Titan Machinery, pretty good at this point. Tractor Supply, not so good. Checking in on the U.S. dollar market, holding up pretty well, considering that the U.S. dollar is once again higher today. At last check, the U.S. dollar index was at 82.49, up about 9 ticks or so. Let's take a look at the chart of the U.S. dollar index. And this is as of Friday's close, but you can see just a bona fide technical breakout going on in the U.S. dollar. So we'll see where that takes us. Of course, a strong dollar is typically not good news for stocks, but again, the market holding up pretty well. We'll check in on UUP. This is an ETF that basically comprised of a bunch of long U.S. dollar contracts. You can see just a huge move here since early May. UUP was recently trading only up 1 penny to 22.83. So if you're bullish on the dollar, this is a good ETF to use. Looking a little bit extended here, you can see just almost a parabolic type move here. Euro week. Let's take a look at FXE. This is the currency shares Euro Trust, and you can see this has been in the doghouse for some time. Just getting obliterated, down for 5 sessions in a row here, and it is down 29 cents, 0.2% to 124.19 today. So that is where we're at. Taking a look at gold, down $20.20 today, 1.3% to $15.51 an ounce. That's $1,551 an ounce. And oil down 10 cents, not much, down 10 cents to $90.76 a barrel. Let's check in on the XLF. This is the Financial Select Sector Spider Fund. Still holding above. It's making a stand at its 200-day moving average here. Whether or not it's going to be able to hold this line, still very much in question. Still, it is up, 5 days out of 6 or so. And again, finding support so far at its 200-day moving average, the XLF. Consumer confidence today, not very good from the conference board. It fell to 64.9 in May, the lowest level since January. That's from a revised reading of 68.7 in April. Economists were actually looking for a small increase in consumer confidence, so not great news from the conference board. Hey, we'll talk about some good stocks when we come back, folks. We'll be right back.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Let's check in on the markets here. About 25 minutes left to go in Tuesday's session. We got the NASDAQ up 0.9%, call it 25 points to 2862. S&P 500 up just over 11 points, 0.8% to 1329. And the Dow up pretty much 100 points, 0.8% to 12,554. Let's check in on a small cap stock here, Web.com Group. Another good day for this stock. Pretty good volume in Web.com as well. Up 6.3%. Wow, it's higher than the last time I checked. 6.3% gain for Web.com to 1625. This stock is actually fast approaching a swing point here. What is that swing point? It is 1643. So good volume. Could see a breakout soon in Web.com Group. Let's see if I have a weekly chart here. So this is just a strong stock, strong chart. Despite its small cap status, there's a very good fundamental story here. You can see a good bullish chart here. Initially broke out over 1555. If you missed the breakout here, the stock showed pretty good supporting action at its 10-week moving average. So 1643 is the new swing point. Definitely one worth watching here. Market cap of around $750 million, thereabouts. Web.com basically provides web publishing, domain registration, online marketing services. They made a big acquisition last year of Network Solutions, but in their latest quarter, their revenues were up 132% year over year to $91.5 million, and earnings up 67% to 35 cents a share. Growth prospects look very strong for this company. Web.com group looks interesting here, to say the least. Let's check in on Whole Foods Market, WFM. This is another, just a big price mover in recent months, but still a stock that does look interesting here in terms of its fundamental and technical strength. The Whole Foods right now up 2.1% to 89.12. You had a recent breakout for Whole Foods over 86.35. That was all the way back here in early mid-March thereabouts. 86.35 was the swing point. You had a big gap up in price when the stock reported earnings. It came down in price, weak market, but it has since been able to move back above its 50-day moving average, and just a good example of just a base building stock here. It's actually still within buying range. If you missed that initial swing point of right around 86.35, right now it's at 89.12. So it doesn't look like to me that the stock or the train has left the station here. What we're dealing with is just a market that has not confirmed a new uptrend yet. So we're still waiting for a buy signal from the market before we start getting back into some of these strong performing stocks, because if you buy a strong performing stock before you jump the gun, you buy it before the market actually flashes that sign of strength, you're just opening yourself up to the possibility of having to cut losses. So I'm trying to stay disciplined here, just trying to wait for a good follow-through day with conviction, and then we'll see what's out there. Other heavy volume movers today. Let's take a look at Allot Communications. This is another small cap name, Israeli networking company. ALLT is the ticker. It is making a monster move today. Up all these stocks, I checked them a while back, much higher than what they were when I first looked at them. This stock is up 10% today to 26.31. You can see nice volume in Allot Communications. This is another just technically healthy stock, outstanding fundamentals, market cap of $800 million. So these sub $1 billion companies are speculative, but if they have good sponsorship, they've got that good earnings and sales growth in recent quarters, where the positives outweigh the negatives, these stocks are okay, but you got to be careful with them, and know where you're going to sell it when you're buying it. Here's a weekly chart for Allot Communications. You see a good solid breakout. The first breakout in the stock occurred in mid-March, right here. Okay, here was the breakout from a base during this week right here. Boom, comes down to its 10-week moving average, finds support. So you could see this name try to take out a swing point soon of 26.97. That would be the high right here. So Allot Communications acting well. Let's also check in on shares of Under Armour. UA on the New York Stock Exchange. Still like the growth very much at Under Armour, like the stock. Another name acting well. It's working on 6 straight price gains here, but a good example of a base building stock. Shares of Under Armour, they make footwear, athletic apparel, up 2% today to $100.14. Let's take a look at the weekly chart for Under Armour. And we'll see a good technical setup here. You see it's been consolidating gains for a little over 5 weeks. For Under Armour, looking at a swing point here of 102.86. So bottom line, these stocks that have moved back above their 50-day moving averages, they're back above their 10-week moving averages on a weekly chart. I'm interested in looking at the stocks showing relative price strength. If this market is ready to move higher, you should see names like Under Armour, like a Whole Foods. Let's take a look at Equinix, EQIX. Excuse me, another strong performer, a stock outperforming today. Another base building stock. Shares of Equinix up 4.4% to 164.88. This is another base building stock back above its 50-day moving average. You should see leadership start to come to the fore, start to the cream rise to the top. I think all three of those stocks, Under Armour, Equinix, Whole Foods, can continue to provide market leadership, but new money is going to have to come in from the sidelines. Still not seeing that yet. Let's check in on shares of Chipotle, CMG. This stock is outperforming nicely today. But this is still a stock that looks a bit troubled to me. I mean, compelling price action today, no question about it. There's decent volume in the stock, not great, but not bad. It's up 3.9% to $416.13. It is trying to reclaim its 50-day moving average. That story has not fully played out yet. It's pretty much just trading right at the line right now. Another base building stock that has more work to do to complete the base. I wasn't keen on this stock. I'm still not real keen on it, but it is showing good price action today. If I'm negative on a stock and the market tells me that I shouldn't be negative on it, and it's market gives me a buy signal, believe me, I can go from negative to positive, especially if the market is telling me to do that. So shares of Chipotle trying to make a case it wants to move higher. Still not ready yet. Good one to watch. Let's take a look at a couple of NASDAQ 100 firms here as well. PCLN, our old favorite price line. And we'll see that price line not nearly as impressive as Chipotle today. It is kind of flailing around here, trading near its session low. Only up about 0.7%, mostly in line with the market right now to 657.32. Stuck underneath its 50-day moving average, really not making giving any signs that it wants to move meaningfully higher from here. Again, I think when new leadership starts to come to the fore, I'm not sure Priceline is going to be carrying the baton, but we'll watch this one, see how the base plays out. Apple is another one, tough stock to bet against, but are there concerns about slowing growth here? Are they going to be able to continue to deliver, the good bottom line and top line growth? They'll still be able to grow the top line and bottom line, but if that rate of growth starts to materially slow down, that may not be good news for the stock. So shares of Apple today outperforming, up 1.5% to 570.94, but still a stock. Oops, go ahead and fix that. Shares of Apple down, still up, I should say, 1.5%, but still underneath its 50-day moving average. So Apple price line still look a little vulnerable here. Pretty good day for Chipotle. Let's check another restaurant stock here. Buffalo Wild Wings, another base building stock. Still not clear to me that that this one is ready to move higher. Let's see. Here's Buffalo Wild Wings. Climbs above its 50-day moving average today. Not much volume in the stock. Again, we'll see how the base takes shape. I'm a growth investor. One of the common pitfalls I avoid is buying a stock too early. Buffalo Wild Wings is going to have to show me more relative price strength. It's going to have to work on the right side of its base further until I'm interested in buying the stock, which means that, yes, I want to see higher prices before I'm interested in buying. That is counterintuitive, but that is, when you invest in growth stocks, that's not a bad way to go about doing things. All right, let's also check in on Scripps here, SNI. This is a stock that I wrote about earlier today over at Real Money Pro, sister website of the Street. Really like the look of Scripps Networks Interactive here. Stock is up 1.1% today to about $55 a share. Scripps operates TV networks like Home and Garden Television, HG TV, Food Network, Travel Channel. Innovative programming. Like the look of this stock very much. Let's take a look at a chart here. What I like about Scripps, what I plotted here is a monthly chart. See this monthly chart? Look at this big correction. Stock comes down, starts working its way higher. This one looks like it's in the early stages of an upward move here, but it's not going to make progress without a strong, broad market. We need to see a new uptrend for the major averages for this one to really get going, I think, but still its relative price strength can't be ignored. The monthly chart shows that it could be in the early stages of a move here. You've got good fundamentals at Scripps, innovative company, high return on equity. lot to like about SNI. And let's check in on WPI here. Watson Pharmaceuticals, generic drug maker, having a good day, up 1.5% to 73.77. You can see trading nicely above its 50-day moving average. Let's move over, take a look at a weekly chart for Watson, and you see a good technical setup here as well. You know, folks, I got to say, 2 weeks ago, I would take a look at my watch list, seeing a lot of technical damage. You know, not surprising when the market's in the throes of a downtrend. Institutions are dumping stock. Now that things are firming up a little bit here, still too early to say if the market's ready to move higher. But when I look at my watch list 2 weeks ago, when I looked at it 1 week ago, when I looked at it this past weekend, it's getting better each week. Getting better each week. You can see all the charts I'm going over here showing you good technical setups that could work if this market moves higher. Watson Pharmaceuticals is another one. You see beautiful breakout in late April during this week right here. You've got a new swing point of 77.73. If that swing point is taken out in heavy volume, I wouldn't be afraid to buy this name at all. Good fundamentals at Watson Pharmaceuticals. So you're seeing a lot of interesting setups out there. But I didn't buy anything today for the Ultimate Growth Stocks model portfolio. I've got select long positions that have held up pretty darn good during the recent market decline. My stops did not trigger. The holdings in Ultimate Growth Stocks currently, continue to hold above support levels. So I'm giving them a chance. To work here. I will start getting more aggressive when the market tells me to get more aggressive. It's not telling me to do so quite yet, but I'm encouraged by the number of decent-looking charts I'm seeing out there. Let's check in on Amazon as well. AMZN. This is another stock. You're not talking about a massive price gain in Amazon. You had a big gap up here when the company reported earnings in late April. It's been coming down in price, still holding above its 50-day moving average. Amazon is up $1.80 today, 0.8% to 214.69. Now let's look at the weekly chart for Amazon. And I think I mentioned this one last week. You do have a classic cup with handle pattern working here. I underlined the entirety of the base right here. Here's the handle area where the last remaining sellers get shaken out of the stock. You've got a new swing point here of 233.84. You could get an earlier entry point. You could see what's called a sort of a pocket pivot, an earlier entry point before it takes out that swing point of 233.84. But this breakout is not going to work without institutional buying. Okay, so that's what we're going to look for at this point. Look for signs of a strengthening market. Look for signs of institutional buying in some of these high-quality growth names that we've gone over today. I think Amazon is a stock that has a chance of working here if the market starts to head higher. Of course, the alternative is that we have this jobs report coming up on Friday. Again, estimates are for 150,000, 175,000 job growth. If it's a disappointing number, market could be in trouble again. So let's keep our fingers crossed for a good jobs number. Just tough to be aggressive with new buys when the market's in a downtrend and as this jobs report looms. So we'll see what happens there. But a lot of good setups out there. I'm encouraged. All right, headed into the final break, folks. You're listening to Breakout Investing on TFNN.
Markets investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
You've heard Basil Chapman on the air hosting the Tiger Technicians Hour and always wondered what's behind his powerful Chapman wave. Well, Basil has just announced a one-day online master trader course where he'll explain his Chapman wave methodology in detail so that you can learn how to chart Basil's one-of-a-kind formation techniques in real time while the market is open. Not only do you get a full-day online master trader course with Basil during live market hours, but by signing up now, you also get a free month of his newsletter, The Opening Call, a $128 value, along with access to his Moving Averages webinar, another $99 value. This online course takes place Friday, June 8th, and will be archived so you can view it as many times as you like for 30 days following the course. Make sure you take advantage of this one-of-a-kind Master Trader course with Basil Chapman during live market hours by visiting the front page of TFNN.com and reserving your spot today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's just wonderful.
It's pretty cool, isn't it?
Oh, yeah, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks. Nice little pop for the major averages as we head into the close here. Good to see. Maybe get a finish near highs. The volume comparison is difficult here because volume was very light Friday. Wasn't going to be hard at all to see NYSE volume, NASDAQ volume coming quite a bit higher than Friday. But still, right now, you're looking at even though volume will be higher than Friday's level, you're only looking at probably 700 million plus shares on the New York Stock Exchange. NASDAQ volume may be on pace for 1.6 billion thereabouts. So both of those levels are below average, even though they will be higher than Friday. So not a whole lot of conviction behind the buying, but still a good strong day for stocks. So let's check and see where we are here. NASDAQ currently up 1.2% to 2872. The S&P 500 also up 1.2% to 1333, and the Dow up 1.1% to 12,590. Economic data later this week. Tomorrow, pending home sales for April. Probably not going to be a big market mover, but on Thursday, We've got the ADP employment change. ADP employment change. That's going to be a look at private job growth in the economy. Right now, you're looking at probably about 160,000 private payroll increase in the month of April. About 119,000 jobs, private payrolls were added. Weekly jobless claims also on Thursday. They're expected to come in at 368,000, just down a little bit from 370,000 the prior week. Also, the Thursday, the second estimate of first quarter gross domestic product. That's going to be an interesting number. The first estimate was growth of 2.2%. Supposed to come in a little bit lighter than that this time around. Call it 1.92%, but still not too bad. Also on Thursday, the Chicago Purchasing Managers Index, and then the granddaddy of them all, a whole bunch of economic data on Friday, but let's keep the focus on the May employment report. Again, estimates are right now in that 150,000, 175,000 range. In April, the economy created 115,000 jobs. So, again, let's hope for a good jobs number. That could be the what is needed to see a buy signal from this market. So we will see how that plays out. Let's check in on shares of Lululemon here as we head into the close. Shares of Lululemon having a pretty good day, trying to get back up above its 50-day moving average, succeeding so far. It is up near its session high. Lululemon up 3.5% to 74.57. Another stock that could successfully build the right side of its base here and attempt a breakout. Earnings are due pretty soon. First, second week of June. Good growth at Lululemon, and another stock that should be watched here for for a leadership type stock. So Lululemon, a good one. Some stocks I'm not a fan of here. We're going to take a look at Ulta Beauty. Ulta is underperforming today, trying to get back above its 50-day moving average here now for 4 days or so, not having much luck, not participating in the market today. It's still a base building stock, still too early to give up on this one, but would think that it would have been able to get back above its 50-day moving average at this point, but shares of Ulta down 38 cents today. 0.4% to $90.57. And how about Salesforce, CRM? Goldman Sachs raised their price target today to Salesforce to $190 a share. What is Salesforce doing? It is down 1% today to $145.51. This stock looks broken to me. Resistance at the 50-day moving average. I'm not looking for Salesforce to provide leadership going forward. We'll see. Not looking good right now. Earnings after the close from Copart tomorrow, the Fresh Market and Tivana report. Thanks for listening, folks. Coming up next, the Tom O'Brien Show. We'll see you back here on Thursday.
Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa